Hello, everyone, and welcome to another episode of Investing Counterpoint. It's been a little while, but we're back, and we have a pretty exciting episode for you today. This one is on silver, and with all that's been going on in markets with the Fed, I mean, it seems like every day is a Fed watch day. Silver and gold have been having some momentum behind them. So we thought today that Daniel and I would talk about silver a little bit. Daniel, welcome.
Yeah, thank you, Jan, and hi, everybody. We've been busy doing a lot of machine learning work and actually building tools for investors like you to do analysis, a much better research, and we'll show some of that today. But I think the main point with the silver and gold is that, well, the first point we have to make is that for over a year, we recorded 3 videos, I think, on silver, 2 of them on silver specifically, where we called out the fact that physical silver is disappearing.
That's right.
The first video was over a year ago, I'm certain. We will link up at the bottom. And at the time, silver didn't do much. I mean, it had a little bit of a run afterward, but nothing was happening for a while. So that's how long it takes. I mean, gold and silver are those kinds of markets where everything takes a really long time.
But,
I mean,
but Daniel, one of the things that happened, I think we also talked about gold disappearing, right? I mean, gold was the other one that was disappearing from the vaults, and gold actually
yeah.
had a bigger run sooner than silver. And so I think what we're seeing now is a little bit of the silver catch up in terms of gold because there's a big dispersion between the two.
Yeah, and it always does that. It always catches up. And both in gold and silver were disappearing, but silver was disappearing faster, much faster.
Mm.
And I really think that in the videos where we discussed it, I mean, our hypothesis was that absent a change, some major change in the trend, which it did not. I mean, the physical silver continued to flow out of LBMA, out of ETFs. It was disappearing. There had to be a breaking point somewhere. Physical market had to, expose the game, whatever the game is going on, whether it's manipulation. We know those prices are manipulated. I mean, it's a fact. There were a number of convictions around that. But I think what we're seeing here is, all of a sudden, gold and silver are going gangbusters. And I'm looking at different analysis and analysts talking about it, and it seems like many different people have many different theories, and that's weird. Normally, when something goes up so rapidly, it's pretty well known why. I think it's pretty rare that you get a situation where like an asset goes up and five smart people have at least 4 different theories as to why. Obviously, they will talk about there are buyers, but that's just stating a fact. That circular argument. Why is silver going up? And I think that not that I can tell you definitively, but I will put forth my explanation. I think that silver and gold are best looked at not as assets, not as assets in traditional financial analytic sense. They're much better looked at as risk indicators, certain kinds of risk indicators. And to me, as a risk manager, that's a very plausible view. There are those measures that are not really assets. You can think of like VIX, right? VIX is, I mean, it's turned into an asset. They've turned it into an asset, but in reality, it's kind of an artifact of the system. It's more of a dashboard signal rather than the actual asset. And I think it is much better way to look at silver and gold, because everybody who tries to explain what's happening are using kind of economic theory to try to explain what's happening with these assets. Whereas I would think of silver and gold as indicators, indicators that show something not about silver. Because look, I mean, it's been a long time. Silver has been very mispriced for a long time. It clearly mispriced because it's used widely in the industry. Clearly, by 2030, the usage of silver will grow by something like 50 to 60%. If you look at China, they have the solar panel program where they're going to build massive number of solar panels which all consume silver.
Mhm.
Right? It's not recycled as gold. It will end up in the landfill a lot of the time because it's part of a Tesla, it's part of a solar panel, it's part of a lot of weaponry. I mean, Tomahawk missile has something like, I forgot what it was, but it must be like 40 pounds of silver or something like that. I mean, something obscene. Nuclear power plants have massive amount of silver, and nuclear energy is coming back. So there's been, for years, it was not, people who looked at the markets objectively, again, looked at silver as an asset. they would be completely baffled. And I was for a long time saying, why is this happening? Why is this happening? Whereas even now, as the silver goes up, we see these explanations that, well, for example, there's a increase in demand, or central bank buying of gold has something to do with it. I mean, it probably does, but central banks don't buy silver, okay? That's not what's happening here. And then there's a very frequent explanation that it has to do with the Fed. I mean, of course, at the core, everything has to do with the Fed now. I mean, they run the market directly or indirectly. But the question is it so simple? And I have a few charts to show where I use the tool, and the reason we have this delay in our videos on my side, at anyway, and Jan's side as well, we were building a massive machine learning tool to help simplify research. So we're using this tool. It's called Remai. There'll be a link in the description for those who care. I'm not going to do a demo, but we're going to use it today because it can answer a question like, how does silver perform when Fed cuts rates? We can try to answer the explanation that the Fed is about to cut rates. As we know, Jerome Powell, it coincided that the real breakout in gold and silver happened kind of after Powell said on 60 Minutes that we're looking to possibly have rate cuts. So we're asking Remai, how does silver perform when Fed cuts rates? And this machine learning model uses thousands of different data points, multitude of databases. It gives us a long answer, which I'm not going to read, but it actually shows us the charts. So instead of me looking up, well, what are the periods of Fed cutting rates? Let me find silver, chop up that chart. It actually gives me all the charts in one place, all the relevant charts. So we can see that 81 to 82, 89 to 92, 84 to 86, all those are periods when Federal Reserve significantly reduced the federal funds rate. Now, what can we see from those charts? Let's go one by one. 81 to 82, silver started at 877, and then ended up at 1138. So it seems like that one particular case confirms the theory. But let's look at other cases. 84 to 86, nope, silver went down, actually significantly down. 89 to 92, it went down again, all the way to ridiculous prices. 2000, 2003, it basically stayed flat, 459 to 457. 2007, 2008, it was down. It was down, significantly. 2019 to 2020, it was down again. So you see, this model, saved me a ton of time. You can try this tool as well if you want to, but it answered a question for me. Just even by looking at the charts, I don't need to read the answer, that most of the time when Federal Reserve cuts rates, silver underperforms, and that's a fact. That's very hard to argue. So when instinctively people try to think about economics and finance very logically. The logic is obvious, right? When Fed cuts rates, money supply, blah blah blah, and then silver and all this kind of economics works because as money supply rises. But we know that for a long time now we live in a world where economics textbooks don't work. They're just completely irrelevant. Something else is going on. What is going on? Why is silver going up so high? Clearly, it's happening because of the mismatch between physical and a paper market. But why is the mismatch happening all of a sudden? Why are people, taking delivery or whatever is happening behind the scenes? I would say that the reason, my opinion, the reason for rise in gold and silver is not, it doesn't have to do as much directly with the Fed. Now, I know that sounds crazy, right? The Fed has printed all this money and so on and so forth. But I mean, first of all, the rates are fairly high, even though the policies are pretty accommodative, but the rates in the United States are high right now. So that's a very odd time, and if the market, let's say, anticipated a massive kind of a decrease in interest rates, that would be plausible somewhat. But again, based on the charts, we see that when Fed cuts rates, that's not what happens, because when Fed cuts rates, typically it happens in a downturn of some sort, and that downturn catches silver and gold with it. So my hypothesis is that silver and gold are indicators. They're indicators of risk. In particularly, they're indicators of kinds of idiosyncratic risks that are rising. Okay, not systemic risk in the market, not a beta type risk, but when lots of idiosyncratic risks are rising. For example, risk of a major conflict, a risk of some kind of disruption, again caused by conflict or disasters or something like that. And I think it's not an accident that this is happening when there's unprecedented military kind of pressure on the world. There's a war in Ukraine. There's also a war in the Middle East now, and who knows what else. So my hypothesis is that people who are buying silver, they're not buying it because they're looking at the Fed. In fact, in this case, my hypothesis is that people are buying gold and silver because they're expecting some major events. And we'll see if this run of gold and silver does not abate, if it continues to go up into May and June. My sense is that there is some knowledge out there of a major types of idiosyncratic events. They're called black swans sometimes, right? So that's an event. I mean, strictly speaking, you cannot anticipate a black swan, but colloquially, we call a black swan event that's like unlikely, that's unusual, that's not systemic. And the multitude of those events, when those risks are rising, people buy monetary metals as insurance. And
Yeah, I
that's
mean,
that's
it's
really
always
my
been a hedge. I
hypothesis.
mean, that's kind of like, the way that gold and silver have been used often as a hedge against, inflation, a hedge against events, a hedge against, the dollar. So, I mean, I think that that's, a way that market participants are certainly playing it now, because we have, like you said, these different conflicts, threats of other conflicts. We have, the more that, Iran and Israel threaten to get into a conflict with different attacks on embassies and et cetera. I mean, these things raise the risk of that, black swan, which isn't a true black swan, but this extreme event that will really shake things up. The spread of the Ukraine war, what have you. So I think people are hedging against those things, buying something with physical value. I think it
Yeah,
makes a
I
lot.
would say that there's another theory that I hear, and even smart people offer it up. It's something to do with BRICS. The BRICS are preparing an alternative to US dollar. I don't subscribe to that at all. Again, this is like our tendency is to believe that because we're analyzing finance and economics, that there must be some economic or financial reason for this, but there mustn't be. I mean, BRICS is not, I wouldn't say it's a joke, but financially it cannot challenge US dollar. The US dollar system, the interbank system worldwide, which is called Eurodollar system, is not well impregnable. I mean, it's gonna go down only in some kind of major world conflagration. It is not going to be dented by BRICS. I mean, China, yes, it's a massive industrial power, but China is an exporter, right? It exports, but not only that it's an exporter, it also, I think that if we talked about 2008, pre-2008, I think BRICS had a more chance then. I'll tell you why. Because both China and India and other participants in BRICS, they were all fooled by low interest rates in the US. So the period, and I thought about this, I don't know how much of this was on purpose, but the period of zero interest rates in the US actually ensured dollar domination until the end of this particular financial order. Okay, and I'm not saying it's a good thing or a bad thing. I'm just stating a fact. Low interest rates after 2008, 2009, and so on deceived, for example, China into borrowing massive amounts of dollar denominated debt. I mean, there's various estimates, but more than half of their debt is dollar denominated. If you take municipalities, their corporations, which are essentially owned by the state. And for all these years, what you got from Communist Party, they would send a message to the regions, more GDP growth. We need more GDP growth. And that ruined them because once you exhaust very productive kind of investments, you start building nothing. I read an interview by a retired minister of statistics in China. He's retired, probably he can speak, honestly, before, he's over 80 years old. He said, we have built enough apartments for like 3 billion people. I mean, most of these things will have to be demolished because the cost of maintaining them, and yet to build them, they took on real dollar denominated debt. So how are they going to get out of this system without a war? How do you, rebuke your dollar denominated debt? And with high interest rates, right, the cost of refinancing. And so people always talk about US government as being in trouble because the US debt, I mean, truly does rise at pretty laughable. I mean, it's astounding, $1 trillion in 90 days or whatever. But, this clown world is not just the United States. I mean, China has to refinance the debt, and China has no ability to create dollars to boot. United States can always create dollars. So we're in the situation where, yes, the United States, according to all textbooks again, according to all financial theories, dollars should be dead. It should be dead. And yet it controls the whole world. And it's going to continue to do that until the bitter end because all alternatives have been foolish enough to buy into the system, to grab a dollar denominated debt to a vast proportion, and that's it. And probably the reason that we're seeing, China is buying a lot of gold. We know central bank, but they permitted people to buy gold. I've seen videos from China, like a mile long line to buy gold. And why are they doing that? Because they probably realize at this point that they're on a hook. They're on a hook and they can't get off without, this cannot end without a major blow up, without a major event. And the event will not be that the dollar dies and BRICS, is unscathed. The event will be, everybody gets hurt and dollar probably remains the last, thing standing. So, but that doesn't mean so many people will pin their kind of hopes, even like people who believe in silver and gold, they will pin their hopes on this BRICS, but it's absolutely not necessary. Again,
Well,
silver and gold, they're not hedges against the dollar per se. They can act as the hedge against the dollar. They're hedges against major crisis events, especially multiple idiosyncratic events. And that's what I think we see happening.
yeah, no, I agree. I think there's a lot of other reasons why BRICS couldn't replace the US dollar on the global stage. I mean, including manipulation, volatility in their currency. They'd have to come up with something new. And I just think it's going to be, it would be really hard for the world to get off dollars, I think. I mean, and not to mention the reasons that you just mentioned.
But they have nothing ready. I mean, if you look
Like
at what
that's
they have meetings. They have meetings and where they scheduled more meetings. I mean, that's the extent of what they did. I mean, it's like there's nothing real. The fact that Russia sells oil for Indian rupee means nothing. I just read recently that the statement from Russian Ministry of Finance that we're going to stop that. Because they don't know what to do with all these rupees. What are you going to do with them? And yeah, you can buy stuff. I mean, this is not to denigrate India. India produces, like, for example, a lot of high quality pharmaceuticals, antibiotics. I mean, you can buy stuff from India, electronics. But the point is, the money is not just for buying. Money is in the world system has to be invested. And where are you going to invest? There's no Indian treasuries. There's no Chinese treasuries. All those countries collectively, they're all exporters. What are they going to export to each other? So it is not going to happen. And this is not to denigrate it or to say that I love the dollar system as it is now. Clearly, I think it's very, it's very oppressive and it's unfair. And but it's a fact that the reason I think it's the best look at silver and gold is to forget all the financial and economic noise and look straight at the motivation at the core of the decision makers, whether at a high level or middle level or even lower level, just individuals. Why would they buy gold and silver? Why did I buy silver? Well, there are two reasons. I feel like the chance of major idiosyncratic event is rising, and there are a number of possibilities for that. And second reason, I'm watching the charts and I'm seeing very wealthy people, for some reason, are taking out all the physical silver out of the system. Those two are enough. There's no need for BRICS or anything else.
So why silver over gold?
Well, I think that, and I'm a student of history. Silver, and I'm of the opinion that people who think that we are somehow superior to the thousands of years of human history because we have a phone and we can press, on the screen, that I think is very foolish. We are no smarter than generations before us. I would argue the opposite. But the point is that silver has always been money. It's always, basically almost all of recorded history, you can find texts where silver was money, and it's not an accident. Silver is beautifully suited to be money. It's made perfectly to be money. It fulfills characteristics of money. means that it's divisible, but it also is limited in supply. So and plus it's something you can tangibly control. People will realize that when idiosyncratic events happen, and as you know, we've done videos. I love crypto as well. I love Bitcoin, but I think that what people realize is that while Bitcoin has massive utility because you can just cross the border with your private key in your mind, memorized, and that's it. It's highly mobile in addition to being limited supply and all this stuff. But what I think people don't realize is that to what degree civilization is kind of a fickle thing, that it can rapidly disappear, rapidly dissolve when events happen. And when that dissolves, you realize that all of a sudden that the money on the electronic ledger is useful for some things, but something that you can hold on to may be much more useful. And I think people rediscover that. So it's not that I like silver for some intrinsic quality of silver, but I just think it's highly underpriced. I think it is the most underpriced asset I have ever seen in my life working in finance for 25 years.
Hmm.
I mean, it really is that bad. I mean, remember previous silver high, all-time high was like 1980, I think, or 81, or maybe 80, was $50 at
Inflation
that
adjusted?
time. I mean, it should be worth hundreds of dollars right now, just
That
based on
inflation
inflation.
adjusted or not inflation adjusted?
Yeah, no, not inflation adjusted. That was like not that
Wow.
was real. So the point is that I believe it's drastically underpriced. It's drastically underpriced because also today it's extracted only at a ratio of 7 to 1 to gold, and the price is like 80 to 1. So here's what I want to point out, and we're probably going to have a separate discussion on Kondratiev waves, which is a very, very useful thing today, always in economics. But first, let's look at the silver gold to silver ratio. Look at this. This is the last 100 years, basically. Let's try and analyze the peaks. And what you notice is something astounding, that the first peak happens around 1914, 1915. That is the start of World War One. That's a massive event. And after that, silver goes up in price massively, right? What happens is the ratio drops. That means that, the ratio drops, right? Then the next peak is this little period of 1941, 1940, 1941. That's the start of World War II, okay? That's uncanny if you think about. Find me another series that with such precision showed us two major events in 20th century. Okay, let's go further. The next peak would be 1991. What happened in 1991? That's actually not just the Gulf War. That's a breakup of the Soviet. I mean, that's a whole remodeling of the world. You can think of it as a third world war that fought not kinetically, but fought with other methods where Soviet Union lost and broke up, followed by a series of civil wars and so on. Massive, okay? Where is the next peak? The next peak is 2020. In fact, January of 2020. Yet another time when the world changed dramatically. We're not going to talk on YouTube on why, but I think everybody realizes that the old world was gone and a whole new situation has developed. A different kind of world is upon us, okay? And so we've seen that, four peaks correspond to four biggest events that have occurred for the last 100 years. So gold and silver ratio is very meaningful, but that could not be if gold and silver were just economic assets. That could only be if gold and silver are deep indicators of idiosyncratic risks. And people who realize those risks, who understand or act very fast on them, because when the World War started, World War One or World War Two, it wasn't obvious. I mean, in 1940 it was more obvious than in 1914, but in 1914 most people thought that it would last a few months. In 1940 it was also not clear that this would be a war that would last for 5 more years and destroy, most of Europe.
So two things that confuse me a little bit about that. One, I'd like to see the period before 1914, which I don't know if we have, although I think
It's
the title.
basically stable. Before 1914, it's between 12 and 15. The ratio stays fairly constant.
Okay. So the weird one to me is the Gulf War, because the Gulf War, I would think, would be, akin to a Vietnam or Korean War, and we don't see the same spikes in those. Like there was no real risk of being another world war. Like the World War was a big deal, right? I mean,
But I don't think
2020.
it's a gold war. I think that 1991, I mean, Gulf War is a relatively minor development at the time.
Yeah,
The
that's
major
right.
development was the breakup of the Soviet Union. So
Mhm.
what happened was
Right.
there was a massive division of the world resources because the biggest geopolitical player with most resources has disappeared as a power player. And so everything was for grabs. Yeah, it ended up without a large war, but that wasn't very obvious. I mean, quite frankly, I remember 1991 and 92 very well. There was a real fear that there will be a major war. And regardless, these were massive, massive events. I know many Americans didn't feel it that way. Half of the world was in major turmoil. Some people were hopeful, some people were very fearful. And there were, there were a lot of stuff going on. So this is not to say that it has to be a world war, just like 2020 is not a world war.
No, I know,
But what I'm
but
saying is
2020
that
is like a
this is,
major event that shook up the whole world,
yeah.
which is the point of a world war. Also shook up the whole world. So that's what I was kind of saying in
But
1991.
1991 is the same thing.
Yeah,
1991 is I mean, if you think about what happened there, basically, large part of Europe, large parts of Asia, all of a sudden were up for grabs. And it wasn't clear where the nuclear weapons will end up. It wasn't clear what will happen with civil wars, which were burning at the time already. I mean, none of that was obvious. So I think that it clearly was, a major event, 1991, and it's not a Gulf War. So, and I think that we can, talk for a long time about why all of a sudden when these, you can call it idiosyncratic black swan risk on events happen,
right.
when all of a sudden this ratio plummets, but it does plummet. That's a fact. Okay. And I think that what we're seeing even in the last couple of weeks is that this ratio compressed a little bit. But what I'm giving you in this video is that you should watch it. If this persists in May and June, both for gold and silver, and especially if the ratio starts narrowing, then we're probably dealing with major, and I don't want to be scaremonger here, but some major idiosyncratic events.
Well, you also see that. I mean, I'm not sure that's the only conclusion that can be what, because it is historically high, and it's got to come down to like a normalized level. It's not at a normal level right now. And so, it could come down to a normalized compression level. Like it could compress for reasons other than, a major idiosyncratic
But it
event.
never has. It always has compressed before when
Well,
there
it's
are
always
major.
risen before too, like before the event. So it's always risen before the event, and then
Yeah,
it kind of comes
yeah,
down.
but you could see that, in 2020 it started sort of compressing. I mean, it's already compressed from 2020. In 21, late 21, it went back up again, but it compressed in 2020, and it does that sometimes. Like, now the question is, from what happens from here? If it keeps compressing, I'm arguing that we're on the edge of major idiosyncratic events, maybe reshaping of the world or something like that.
Well, it can compress in two ways, right? It can compress with gold coming down, and it can compress with silver rising. And I think that those two have
Um,
different.
well, I think that they could both be rising, but silver will be rising much more rapidly, and
Yeah, no,
that's
or they could be
yeah.
falling and gold falling much more rapidly, and that would bring back
No,
the.
that never happened. I don't think that's ever really going to happen. That's never going to happen.
Oh,
That is not plausible. So when it compresses, it's for the reason that they're both rising and silver is rising faster. Because silver, in the risk sense, typically during risk events, it's a leverage bet on gold.
okay, but but to say that gold isn't going to fall faster than silver, that is never. I mean, I don't think that's true. I mean, it can definitely compress that way. Like, why couldn't it compress that way? Like, there's no
I
reason
have
that
to look at
silver.
the data, but my gut reaction is that that's not possible.
Well, it has to come together somehow, and so there's two
Well,
ways
it's
for it.
just well, that, yeah, I understand.
Well, anyways, I think we should leave it there. What do you think,
Yeah,
Hank?
I should probably do more analysis on, what went up and what went down. We
Yeah,
should cut
maybe.
out this
I
part,
think we
but
both should.
yeah, we should, yeah, and we should close with that.
Yeah.
So please comment if you're interested in this topic. I mean, we're discussing it from a different perspective than most channels. If you're interested in learning more about silver and gold from risk management perspective, we can do a deeper dive and examine some of those events. In general, comment and suggest topics. Like the video. If you don't like it, put don't like it, but explain why you don't like it, so we can, argue with you.
Yeah, exactly. All right. Thank you all for joining, and we'll see you next time.
Thank you.